Welcome. In this video, can Zbcn coin price make new high? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When the chart is closely examined, a healthy and steadily progressing ascending channel structure becomes apparent. These types of formations show that price movements in the market are progressing within a certain discipline, and that investors are decisively determining direction. Both the lower and upper boundaries of the channel are clearly defined, and price movements are continuing their upward journey in a rhythmic swing within this channel. This indicates a strong and consistent trend and shows that the market is technically based on solid foundations. The current price position is in a particularly noteworthy area. It has moved toward the midline of the channel and is attempting to hold above that level. The midline in ascending channels typically serves as a transitional and decision-making zone. The price may linger here for a while, as this point acts as a key threshold where upward movement is confirmed and downward corrections face resistance. Although the price is slightly below the midline, its resilient stance at this level shows that the buying appetite is still intact. Channel formations are extremely useful tools for helping investors determine direction. Especially an ascending channel structure, which indicates a general upward trend, provides valuable clues with every price movement within it about what the next move might be. In the current situation, the price is struggling to hold at the mid-channel level, and a potential breakout above this zone could pave the way for a new wave of upward movement. If the price manages to break above the midline and maintain that level, then a move toward the upper boundary of the channel becomes highly likely from a technical perspective. This could offer new buying opportunities to investors and further strengthen the optimistic atmosphere in the market. Such technical breakouts often set the stage for new momentum and lead to increased volume. At this point, a rise in trading volume will play a critical role in confirming the direction of the price. The upper band of the ascending channel stands out as the next technical target. Reaching this level would be a significant accomplishment both psychologically and technically. This level represents a zone where previous highs may be retested, and possibly new highs may be formed. Technical moves toward such levels typically attract more investor interest and increase confidence in the market. Currently, the rhythmic and balanced movements within the channel show that the market structure is quite healthy. The price remaining within this ascending channel indicates that the trend continues without disruption and that buyers are still strong. In particular, a sustained close above the midline could open the door to a new wave of upward movement. Such a breakout would not only be a technical success, but would also serve as a psychological boost for investors. Moreover, in technical analysis, sensitivity to channel structures is highly important. Prices often make directional decisions when they reach the boundaries of such formations. Therefore, the midline level, if broken to the upside, may become more than just a temporary stop and could act as the catalyst for an upward breakout. This presents a moment of opportunity that investors should carefully monitor. Breaking through such technical thresholds can create entirely new movement zones in the market and pave the way for broader rallies. The lower, middle, and upper bands of the ascending channel serve as dynamic support and resistance levels from a technical standpoint. These bands act as a framework for healthy and stable price movement. The price's gradual upward progression within this framework indicates that market participants are confident in the direction and that selling pressure is weak. Breaking above the midline will further reinforce investors' belief that the price can test higher levels. But we cannot rely solely on the channel for analysis. Let's take a look at other metrics as well. Stay tuned. According to the assessment within the framework of Elliott wave theory, the current price movement exhibits a rather interesting and promising structure. When the chart is examined carefully, it can be observed that the price is currently moving within what is theoretically considered the third wave. This third wave is regarded in Elliott theory as the phase where the strongest and most aggressive rallies occur. Therefore, the stage the price is in right now could signal an exciting period for investors. The third wave is typically characterized by high momentum, significant volume increases, and a decisive market trend. This suggests that the rally may not just be a short-term move, but part of a broader and more sustainable upward trend. If the price manages to surpass one of the Fibonacci projection levels, namely the 4,272 ratio, then from a technical analysis standpoint, a scenario emerges where there are no further major obstacles ahead, and the potential for the price to reach higher levels becomes more apparent. Breaking through this level would confirm the strength of the current rally and provide confidence to market participants. Especially a price action above the 4,272 level often has a positive psychological impact on investors and further strengthens bullish expectations in the market. Another noteworthy point here is that above this level, there is no longer a Fibonacci-based resistance zone. In other words, from a technical perspective, the price is no longer facing any significant historical selling pressure or mathematical resistance level. This means that the price has the potential to explore new territory freely and without restriction in its upward movement. In such a scenario, the market is technically open to discovering new highs, and the formation of new peaks would not be surprising. This technical setup provides strong signals that new opportunities could arise for investors. Moreover, in strong third-wave structures like this, price movements are often sudden and sharp. This can offer investors significant profit opportunities in a short amount of time. With the price moving above the 4,272 level, market sentiment becomes even more bullish, and the upward momentum accelerates. For investors looking to take long positions, this level represents the breaching of a major psychological barrier. The surpassing of such technical levels often draws the attention of large players and may trigger new capital inflows into the market. Looking at the chart overall, the third wave appears to have a healthy structure. The fact that the price has clearly formed the previous waves supports the validity of the Elliott count. Furthermore, within this third wave, price movements are progressing in an orderly fashion, and the market exhibits strong directional conviction. This indicates that the upward movement is likely sustainable. Especially achieving permanence above the 4,272 level could act as a catalyst for a strong rally for both short-term and medium-term investors. Fibonacci projection levels, when used in conjunction with Elliott wave theory, yield extremely powerful analytical results. And right now, the chart is signaling that if the price surpasses the 4,272 level, it would not only mean a technical resistance has been broken, but also serve as a strong confirmation signal that a new bullish trend is beginning in the market. The fact that there are no additional resistance zones above this level, according to Fibonacci projections, also indicates that the price has a chance to advance into previously untested, untouched territory. This is a highly positive development from a technical analysis standpoint for investors. In summary, the fact that the price is currently within the third wave according to the Elliott count and is targeting the 4,272 Fibonacci projection level signals a highly positive technical outlook. If this level is broken to the upside, there will be no significant resistance left ahead, and technically the path for further gains will be open. In other words, the market may now be entering a new phase of price discovery. In the technical analysis on the chart, the current state of the ATR, or average true range indicator, has reached a very remarkable level. ATR is an extremely valuable tool that measures the level of volatility, the extent to which prices fluctuate over a given period of time, and right now this indicator has reached a very high level, indicating that the volatility in the market has gone through the roof. This suggests that the market is experiencing significant price movements and that traders should be paying close attention. However, this volatility is not only an element of risk, it is also a harbinger of many opportunities. We need to look at the ATR indicator every now and then. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.